Good afternoon to everybody. I'm Valentino Pediroda. I'm the CEO of modeFinance, and with Andrea Sorrentino, who is the head of Fintech department in our company, we are keen to show our last technology, the reactive score that we developed together with Bureau van Dijk and Moody's Analytics.
Good morning.
Showing our new product that is now available inside all Bureau van Dijk and products. It's called Market Reactive MORE score. This is the agenda of our presentation. We will start with introduction, in which we were talking why we developed the new score. That is an idea coming from, unfortunately, that COVID-19 crisis, and showing the difference between the difference between the MORE score and the new Market Reactive MORE score. Then we will go deeply in detail with Andrea Sorrentino about the technical development and the results. So, which are the technologies behind our new score and how we develop this new technology, and of course the final model with the results and the validation of the model, and then some conclusion about the technology that we develop all together. Why is important to develop a new score during the COVID-19 pandemic? Unfortunately, because as we know, the new problem that we have to solve today in this world is completely unexpected, sudden, and destructive. As we know, the solvency of the corporates has been deeply ruined by the lockdown. So, of course, during the lockdown, many sectors were without any kind of turnover, and of course that was a great impact, unfortunately, a great impact to some sectors, country. But the lockdown was not the only problem that we had during the COVID-19 crisis, but of course there is even a fear of the future, because of course, and as we know, the company are doing longer payment terms. So of course it's a big fear of the future, that even because now we have the second wave of the pandemic. So this is a big impact. And then, of course, there is even a disruption of the supply and distributing chain. All sorts of things is completely unexpected. So what we have to do is going from a nowcasting of the scoring or the rating of the companies. Nowcasting means understand in real time what is the real behavior, financial behavior of the company. Of course, this nowcasting and the impact of the COVID pandemic is based on country level, on region level, and industry and commercial sector. Country, because we know very well that the crisis impacted the countries in different way. Regional, even because inside the country, at regional level, we had a lot of difference. And then we know very well about industry. On the right, you can show, of course, the difference of the equity value of Amazon and Eni. So one, a very famous company, I can say high-tech company, and one more classical oil company. And you can see as the COVID impact was completely different in the two corporates. Of course, the question is coming, but so the MORE score is not anymore valid in this field. It's not true. We are developing a new matrix, a new way to evaluate the scoring. The MORE score gives you the quantification of the capacity of absorbing the shock, so the resilience of the companies. So higher is the rating, stronger is the resilience to absorb financial shocking. So it's a score and as a measure of the risk that is absolutely still valid. But we have to add to the MORE score another view of the risk, that is nowcasting. So not only understand what is the resilience of the companies, but even understanding which is today, nowcasting, the behavior of the company. Of course, to develop this new score, we have to change a little bit the basis inside the technology, so because we have to develop something that is absolutely more reactive to the environment where the company operates. Has to be a lot very reactive because today all conditions are changing very fast inside the market where the company operates. So, of course, the responsive is very, very important. Of course, the model has to be forward-looking because we have to understand what is the impact today of the COVID crisis inside the company and forward for the next year. Has to be more granular in terms of sectors because, as we saw before, the impact of the crisis is very granular in terms of region, countries, and especially sector. Of course, has to be based on more technology because we know very well that more technology is absolutely valid to understanding the creditworthiness of the company. Has to be point in time, so reactive to every changes in the economical behavior of the environment where the company is operating, and of course has to maintain the same outputs because the clients want to know the rating of the company, the probability of default, and the credit limit of the company. Of course, this was, I can say, a really challenging work, and we work together to Moody's Analytics for the macroeconomic data forecasting. That, of course, is extremely important to understanding what will be the impact in macro way of the crisis inside the countries and inside the sectors. Of course, we work with Bureau van Dijk because thanks to the huge amounts of data, we had a lot of information that we can use to develop the new score. And of course, we did our technology to in artificial intelligence and big data analytics to collect all information and to develop this new score. Now I leave the talk to Andrea Sorrentino, who was in charge with his team, the Fintech team of modeFinance, to develop the technology. Thank you.
Thank you, Valentino. So at the beginning of March, we were indeed challenged with the task of creating a new model, which had to have at least three key features. Firstly, to be highly forward-looking, but at the same time to be point in time, so having a nowcasting feature. Then it had to be sector dependent, and last but not least, it had to be country dependent. And even more, to be applicable to as many companies as possible. As you probably know that the MORE score is today assessed above 20 million companies on Orbis database. So the model that we have developed, so the reactive score, lays its foundations on modeFinance ForST model. The ForST model has been developed over the past 2 years, so in unsuspected times, referring to the COVID emergency. And such model is an algorithm through which we can make a forecast of the financials of a company, but also a stress testing. Indeed, ForST is the acronym for forecasting and stress testing. We will, during this presentation, see in a little bit of detail on how this model works, and then we will see how we factored in the sector and country impact of the COVID in order to have the most accurate projection of the creditworthiness of a company, which is the reactive score. So diving a little bit into the ForST algorithm. ForST indeed is a simulation tool that will forecast the financial evolution of a company. It was developed on a very large data set of more than 15 million companies with 10 years of history. And the idea underneath this model was to observe the real evolution of the financial statement of the companies over time based on defining some periods of comparables. So we wanted to cluster companies according to some key metrics, such as, for example, country, sector, size, creditworthiness, etc., in order to see how they evolved over time, their financials evolved. In order to achieve this goal, we applied also some artificial intelligence technologies to cluster the companies and to be able to capture what were the discriminating features of the financials, but also qualitative information of a company that were determinant into the evolution of their financials. Obviously, every cluster defined by this AI technology was supervised by modeFinance rating analysts, so to be very sure that the clusterization still kept was meaningful under a financial analysis perspective. So, in this clusterization procedure, there were some qualitative elements, of course, such as a sector and country of the companies, but also there were some key financial structure variables that were determinant into the characteristic of the future evolution of the financials of a company. So having defined these clusters and by observing the evolution of these companies over time, we were able to obtain some statistical metrics that enable us to forecast the financials in the most accurate ways as possible. Nevertheless, as for the MORE score, it's not always everything a matter of statistics, as we closely look also at the specificity of each company into its historical evolution. For instance, we closely look at the cash cycle of the company, which is very peculiar, in order to forecast its financial on the basis of the clustering analysis and some statistical metrics, but also keeping in mind and observing its peculiarities, especially in terms of cash cycle and working capital. These enable us, via the ForST model, to forecast the full financial statement of the company within a given time horizon. And on top of this financial statement, we can compute, we can analyze, assess the creditworthiness of the company via the MORE score, as it is known for all the other companies based on historical data. So, including probability of default estimation, credit limit, etc. But ForST is even more than this, because the user can drive the simulation via some specific input, which we name indeed drivers, such as the debt structure evolution, the cash cycle evolution, and last but not least, the sales revenues evolution. So how does the model work in this case? If, as in the example that we are seeing here, the user is figuring out a 20% or wants to stress test what happens to the financials of the company in face of a drop in sales revenues of 20%, the model would look at the same statistic that I was talking before, but looking at companies with similar variation of revenues. The same, of course, applies to all other inputs. And so the model will observe what happens to the company with the key metrics that I mentioned before, plus the input used or identified by the user. And this is a very important feature of the model under a pandemic scenario such as the COVID-19, because if anything, during the prolonged lockdown period that we faced in March and April, but which also we're facing again now, at least in some countries, for sure companies will face a major drop in their operating revenues. So in order to be able to guide the simulation of the financials with such an important assumption, is essential to respond to the need of creating such reactive score. So let's keep in mind for the future slide that the key metric that in the end we want to estimate is the expected or expectable operating revenues drop of the companies. But we have to obtain such expected drop by country and sector. So let's see now how we measured and how we are measuring the sector impact of the COVID-19. Since the very beginning of the crisis, it was immediately clear that the impact of COVID emergency was highly dependent from the sector. For example, air transportation has surely been one of the most hit sectors in a negative sense. On the other hand, if we look at medical equipment production, probably such sector was hit in a positive sense. So at the same time, it was evident that some sector could have been defined broadly, so more generic, but there was the need to define some niche sectors where the impact has been more extreme, either in negative or in positive sense. So how did we carry on this kind of sector analysis? We proceeded with a three-way approach. The first, more qualitative, we were looking at papers and publications by some foremost publishers such as Gartner or Reuters to study what was the estimated impact of the COVID on the different sectors, and especially what were the most impacted sectors. On the other hand, we pursued also a more quantitative analysis. So we analyzed eventually variation or increase in the default rates by sector. And last but not least, probably most important, we analyzed the reaction of the stock prices by sector. So per each of these analyses, we sort of defined the sectors in terms of their composition and in terms of their impact. Then we merged this information in order to define a new definition, so to speak, of these sectors and their relative impact. We based our aggregation of the sector on the NACE industry classification, so to be consistent with both with the MORE score and eventually with the qualitative as well. This process of analysis led us to define 40 sectors. 17 named general, with a broader definition, and 23 focus. We named them focus sector. They are niche sectors. In most of the cases, a focus sector stays within a broader sector. For example, we had a general definition of chemicals, but within chemical, we have two focus sectors: the manufacture of coke and the refined petroleum products, which was most severely hit, and the production of manufacture of other products that, according to our analysis, was positively hit. So we had this double definition of general sectors plus the focus sector, which were mapped on the NACE industry classification. In terms of impact, we defined a sort of 5 classes impact, where the 3 most moderate impacts, ranging from negative to moderately positive, was ascribed to the general sectors, whereas for the focus sector, we have the 2 more extreme impacts, either extremely negative or extremely positive. So we have the 40 sectors, each sector with one of these 5 different scenarios. Then we are about measuring the country impact of COVID. Once again, let's recall that in the end, we want to have an input for the ForST simulation. Namely, we want to have the expected operating revenues variation of the company. So at the same level for the sector, it was clear that the impact of COVID was going to be very different even country by country. If you recall, at the very beginning of the emergency in March, Italy was one of the most hit countries, at least in Europe. Now, with the incumbent second wave, the situation in Italy is not as bad as in other European countries. So it's important in the model, in the reactive score, to reflect on a very timely, with a very quick response, these changings at country level. And this information has to be included into the reactive score. Here is where Moody's analytics team came to support us. So we wanted to include indeed the country impact, and the most straightforward way to measure the country impact was to see the variation, the impact of the emergency on some key macroeconomic indicators. On the other hand, as already said, we wanted still the country impact to be somehow correlated, or the measure of the country impact to be correlated to the expectable variation in operating revenues of company. So Moody's team suggested us to test 4 key macroeconomic indicators versus the expectable variation in revenues of companies. And these indicators are the gross domestic product, the unemployment rate, capacity utilization, and industrial production. So in order to test and quantify their correlation with the revenues variation of companies, we downloaded a historical series from Moody's database, historical time series of these variables with quarterly frequency. At the same time, we downloaded for the same period the interim financials of all listed companies, still with a quarterly frequency. So from the listed companies, we computed the variation of the operating revenue, and from the macroeconomic indicators, we computed their variation. We tested the correlation at country level between each of these macroeconomic indicators and the variation of revenues of the company, and we found out very, very interesting result with strong correlation to each of these variables. So these findings were the basis for creating a country ranking model based on the observation of these variations in macroeconomic indicator with a plus. With the plus that Moody's performs quarterly forecasts on these macroeconomic indicators. So not only the model will be point in time, as those indicators are updated monthly, but it's also forward-looking, because we are using end of quarter forecasts for each of these indicators. So we modelized the ranking of the impact of the COVID by using a weighted sum of these of the variation of these actually of the standardized variation of these 4 macroeconomic indicators, where the weights ascribed to each variable was proportional to the correlation that we observe between the specific variable and the variation of turnover of companies. So even after running this model, which is currently applied indeed to the forecast of such indicators, we are ranking the countries in 5 different scenarios in order to be consistent and coherent with what done for the sectors. So summarizing the country impact, every month modeFinance will download from data buffet by Moody's the values of each macroeconomic indicators per country, looking at the forecast for the current quarter, so end of current quarter. We will run our model for defining the country impact, and we will have the impact at country level based on the observation of the forecast of the variables, which is updated monthly. So now we have both the the sector impact and the country impact. So for every country, we have 40 sectors. We have to come up with a final impact of the the COVID, combining what observed for the sector and what observed for the country. We're using a matrix approach in order to come up with a unique scenario for the combo country sector. Once again, we use 5 different scenarios ranging from extremely negative impact to extremely positive. Obviously, via this combination with the matrix approach, we will have many more negative scenarios rather than positive scenarios as we are facing a pandemic event. And now there's an important piece of the process of the overall model. To each scenario, so for the sector per each country, by the way, we are, thanks to Moody's data, we are able to have a country impact estimation for 208 countries in the world. So we have this 40 sector and 208 country, and we have to ascribe an expectable revenues variation per each of the scenarios. In order to do so, once again, we refer to the most up-to-date and realistic and reliable data that we can observe, which is the interim financials of listed companies. So once again, on a monthly basis, modeFinance will download all interim financials of listed companies and will compute for each company the variation of revenues for the current quarter and analyze the distribution of such revenues variation. If you look at the graph on the right, it's interesting to notice how during the run of the summer, so starting from June to September, blue line, the decrease in revenues is moving downward to more negative numbers, highlighting a deterioration of the situation over the summer months. So after having every month defined these distributions of the variation of operating revenues of listed companies, we will use some key percentiles of the distribution to address or to associate an expectable operating revenues variation to each of the scenario for all the combination country sector. This number will be the input of the ForST simulation of the financials of the company. There's actually a very last step that we perform in order to have this estimate. Some of you may argue that we are referring all the time only to listed companies, which is true because it's the real and more point-in-time data that we can have. On the other hand, listed companies tend to be large companies with high resilience to some crises, such as the current one. But 90+% of companies worldwide are small and medium enterprises. So we introduced this size scaling factor of the scenario by applying let me pass the term, a downgrade in the scenario applied based on the size of the company. We classify companies small and medium enterprises according to European definition. And if a company, for instance, is a medium company with an original scenario coming out from the combination country sector, which is 3, so intermediate, we will downgrade the real scenario, hence the input for the revenues variation expected by 1 or 2 classes 1 in the case of the medium companies. In this way, we're more conservative in considering the fact that with respect to what is observed for listed company, small and medium enterprises probably face a lower and smaller resilience. So the final result of this process is that we come up with a sort of database, which is updated monthly, of countries with their relative impact derived from the observation of macroeconomic indicators. Every country has its 40 sectors divided in general and focus. Each sector has its own impact, and there is the final scenario, which is the combination between country and sector. Plus, we factor size of the company, eventually penalizing the final scenario, and ascribing to every combination, country, sector, size, the expected sales revenues variation of the company. This will be the input for the reactive score simulation. Every month, actually with a weekly frequency, we run the reactive score, the reactive MORE score, on over 15 million companies. And before delivering results to Bureau van Dijk, we obviously make thorough checks of the consistency of the results. Obviously, we will expect under the current scenario some downgrades, generally 1 or 2 classes, except for the positive scenarios. This new methodology is now available via a very user-friendly interface on Bureau van Dijk's products. And this is, in a sense, how the MORE reactive score works and how it's been developed starting from last March. I hope to have been clear enough. You will find my contacts at the end of the presentation, where you do have any question. Please feel free to drop an email, and I will pass the mic again to Valentino for the conclusions.
Thank you, Andrea. Extremely beautiful for somehow. So we arrived to the conclusion of our talk. I have to say that it was a challenging period with a really important target to reach. The important target to reach is give to Bureau van Dijk client, to our clients, a tool to forecast the impact of the COVID series, of the COVID pandemic. Of course, this was a very strong and challenging target, because we have even to apply to millions of corporates for every countries and every sectors. So I think it was really interesting to work on that. But altogether, we had the view of how to do this. The view is the collaboration between corporates. So in this work, we put together our technology, the Bureau van Dijk view of the market, and of course, huge database of information, and the extremely important help of the Moody's analytics forecasting of the macro variables. We had many meetings together, and I think we found in very short time a really interesting product for the Bureau van Dijk clients. The idea is to develop a completely new score which can be reactive to what is happening in this world, and nowcasting of the impact of the financial shock to every companies in the different countries in different world. This, in short time, is available on Bureau van Dijk databases, and I really hope that this can really help everybody to pass over this crisis that we are everybody facing. Thanks a lot, and thanks to all companies for the collaboration. Thank you.